Hey, good morning, everyone. It's Tuesday, February 3rd. It's snowing here in the beautiful Canada. And I am just back from walking my dog, and so I'm wearing my hat because I'm still pretty cold. Testing, testing. Okay, good morning. Good morning, Euphoria. Euphoria. I just came in from walking my dog. I'm cold, so I know I'm dressed like I belong in the snow. It's because I just came from the snow. Anyway, how are you this morning? So I noticed on the economic calendar that all the non-farm payroll red folder events for the week have been canceled. So this morning we have nothing. We don't have any news, but what we do have is FOMC members speaking. And when members speak, that can cause the market to I don't know, just it causes some volatility in the market. We get some wicking and stuff. Hey, Donald. Donald Starkweather is you must be where I am. Sure, Donald. Not sure. Can you just maybe expand on that question a bit? But anyway, I'm going to go through what I'm looking at this morning anyway. We're looking at the economic calendar because the non-farm payroll events for this week have been either postponed, they're canceled. So there's nothing today. And then Wednesday, oh, it's back on. Wednesday we have so tomorrow 8:15 non-farm employment change. Okay, so that's fine. And then Thursday more speakers. And then Friday we have unemployment change. And then it says government data may be impacted by the shutdown. So anyway, the idea is to keep an eye on the on Forex Factory on a daily basis for any changes that that may occur. So okay, so what I'm going to do is I'm just going to kind of walk through. I'll just do a quick update on some of the things that I'm looking at for this week, and maybe clarify anything for you, Donald, in terms of what I was discussing on Sunday. Oh, from Florida. Oh, nice. Okay. Well, anyway, it's freezing here. I'm in Canada, and we've had a brutally cold winter. Like it's been minus 28, 29. So anyway, I'm warming up. Okay, this is the chart that I shared on Sunday. This is the 1 hour Nasdaq chart, and this is the chart that I use not to trade on, but this is the chart that I use to make notes of what happened, any major events, anything that happened, CPI, so that I can look back on this chart and I can just kind of see maybe just refer back to anything. I also put my trades on here. So you can see I had a trade on Thursday and then a trade yesterday. So this is a chart that what I have on this chart, I do not have on my trading chart. Let me put it that way. So, I keep the two kind of separate, but this is what I was looking at on Sunday. Hi, Lavere. Hi, Lavere. Nice to see you. So let's just take a look and see what happened yesterday. Market opened. So we had this big drop on Thursday, and then Friday we came back into the range. The range that we're dealing with right now is, you could look at it as the high to the low. This is the range that we're dealing with. This is the range that we're in right now. So we take the high and then we take the low. Technically, you could take this high, but why not just include the higher high? So the high to the low. This is our range. So price dropped down on Thursday, came back into the range, came back into this SIBI on Friday, this pink SIBI here. And so I'm going to make my chart really big so you guys can see what I'm looking at. So between candle 1, 2, and 3, price created this SIBI. And I'm on the 1 hour, guys. I'm always on the 1 hour for the major levels on my chart. So this SIBI was created when price fell really quickly, and we fell back into the daily. This is the daily BISI down here. My rule of thumb right now is when we're above this daily BISI, then I am bullish. And if we drop below it, then I'm turning more bearish. So price came into this daily. We dropped a little bit below overnight on Sunday. And this is when we had this beautiful manipulation on Sunday night at about 2:30, 3 a.m. And then from there, price moved all the way up. We moved above this BISI and we moved back into this important SIBI up here. So that's where we are right now on the daily, or sorry, on the hourly. So couple of things here that that I'm mindful of, that I'm curious about, is we have above us the previous month high, and we made this high last week on Wednesday, January the 28th. And price had finally come back into this pink SIBI area here, and we hadn't been here since November the 5th. This is when it was created all the way over here, and that was November the 3rd. So since then, you can see the price has been kind of like below it. We've been engineering liquidity, and finally we burst above it. So that was something that was kind of fun to see. So now the question remains, okay, what does Smart Money want to do? They brought us down really low on Sunday night. We took out the previous week low, and we dropped into this hourly SIBI. This was key. This is why I went long. Anytime price does a major swing above or below and manipulates, if it moves into, taps into a 1 hour or higher PD array, this is a very, very good sign. And this is ultimately why I went long. So this BISI here was created between candle 1, 2, and 3, and that was back on Wednesday, January the 21st. And you can see this was the first time we'd been back down here since making this BISI. So price drops into here, takes all this liquidity, and then price starts to move up all night and then continues to move up during New York AM open yesterday. We are now back into this hourly SIBI. Now I'm interested in watching to see what price wants, what Smart Money wants to do. So what are the possibilities? The possibilities are we could move up and retest these levels that we made last week. Since we were here last week, price may want to reprice up to here. We may tap into, this is the previous month high again. Again, this could be a revisit up here. This could become a mitigation block. So what does that mean? That means that, well, we can see after we made this high up here, price was mitigated. These two candles here failed to make a higher high. These candles here failed to make a higher high. Price was mitigated, and then price dropped. So this could turn into be a mitigation block. In other words, price is not going to go higher than this high, and price may drop again. Price could bounce around for the rest of this week, given that it's a volatile week, it's non-farm payroll week, and it's also a week where the framework for the month is yet to set up. That's what the first week of the month is used for. It's to set up the framework for the week. So I'm watching this area with interest, just to see are we going to reject from here? Are we going to mitigate from here? Or are we going to retest these areas? If we're going to retest these areas, what will it take? Will it take some news? Will it take a red folder event? Will it take an external political event? Who knows? But this is the area that I'm watching here. In the meantime, let me just read some of these. You said there was a way to enroll in your chart write-ups for, I think you said $20. Oh, okay. Donald, yeah. Okay, give me a second and I'll show you exactly where to find that. By the way, you can keep the cold. Yeah, thanks. I appreciate that. I can keep the cold weather. Okay. So, okay, so that's the lowdown on the 1 hour chart of where price is. Now, I want to bring one other thing to your attention, and this is something I pay attention to every single day, and it's what I'm looking at right now. Midnight. See midnight here? Do you guys pay attention to midnight? Put a 1 in the chat if you pay attention to midnight, and put a 2 if it's not totally on your radar. So we noticed that last night, this is our midnight, and this is, again, I keep talking about these indicators that I have on my chart that I pay for because I love them. And so here's all the indicators, right? Here's all the different levels: previous monthly low, previous day low, year low, year open, month open, midnight, previous month high. If I go down onto the smaller time frame, you can see in blue, you can see here's my, here's midnight. Let me just move this out of the way so you can see all these blue areas here? These are cycles. So this is yesterday morning, yesterday afternoon, Asia, London last night, and then morning so far. These are all done for you. So every time you come to your chart, everything is set up and ready for you. You know exactly where you are. It's 20 bucks a month. It's the best 20 bucks I've ever spent because for years I've put all these on my chart myself, but now I just love having this set up for me because every time I open my chart, I know exactly where I am for the month. But I want to talk about midnight right now. And so we know that the way price works is this is price. I'm gonna make this a little bit thicker so you can see it here. So we have price here. This is price. This is the daily candle, okay? And when price opens at midnight, and that's per ICT, this candle opens and we have open, low, high, and then close. And so I'm just going to call this here a bullish daily candle, okay? So that's bullish. That's how price moves. Price opens, open, low, high, close. And then we have the bearish candle, which is basically bearish. And we have, here's the daily candle, and then we have open, high, low, close. Sorry, bullish is open, low, high, close, and then the opposite is bearish, so it's open, high, and then low, close. Yeah, okay. So I'm always watching every day, and I watch overnight as to what's happening at midnight. So midnight is the opening as per ICT. That's when the day opens. So we can see here that last night, here's our midnight range. Here's our midnight open. Here's our midnight candle right here on the 1 hour. We can see that price really hasn't moved far from midnight. Okay, so that's very telling in that if one of these two scenarios is going to happen, we have to see either price moves away from midnight or moves above midnight. Right now, we have price has been hovering around midnight and it's just dropped below. So if we're going to take a hint on which way price may go, we're going to use midnight as that indicator or a clue in terms of which way price wants to go. So a general rule of thumb that I like to use is I want to buy below midnight. So when price moves down here, I want to buy, and when price is above midnight, I want to sell. Because if these scenarios are true, then we want to see price open, low, drop low, open, low, move higher, and then close. So if price is going to go higher, it has to move lower first. Okay, so I hope that kind of makes sense. And so when I open up the chart this morning and I see that price hasn't really moved from around midnight, we're hovering around midnight, this tells me that we may just see some chatter this morning because price really hasn't moved away from midnight. Let's compare that with what happened yesterday. So midnight yesterday would be over here. So midnight was right here, this red line here. So here was midnight last night. So price opened, moved lower, then moved higher, and then closed, right? So someone was asking me in my chat yesterday, how did I know that this was the low of the day that was going to be put in? Well, I didn't know. It's 9:23, by the way. I didn't know that this was going to be the low. Like, we never really know. However, when it's moved, when it opens at midnight and it moves down, that's the time to buy if you believe that price is bullish. So anyway, that's how I like to use. So I'm noticing this morning here on my chart that although midnight opened over here, here's the midnight candle. If I just draw a line through it, well, we haven't moved right here. Here's the midnight line. Price has been a little bit above, a little bit below, a little bit above, a little bit below. So price hasn't really moved much away from open for the day. So I just want to bring that to your attention because that's something that I noticed on the chart. Anyway, there we are. Non-farm payroll week has changed, and so you guys should update yourselves on the economic calendar. Yeah, there are free indicators. There are some free indicators on Trading View, so you don't have to get the $20. You can get your SMT for free. You can get some of the levels for free. So yeah, so like there's no pressure. I just whatever you use, whether you get a free one or the $20 one, like do yourself a favor and get some of these indicators for your chart because they really cut down on the amount of work that you have to do. Okay, so I'm just going to go to my trading chart now. And okay, so we all know where we are. So here we are, we're in this SIBI. Midnight is here. So nothing much has changed. Also, look at the 4-hour candles. So the last 1, 2, 3, 4, the last 5 candles, certainly the last 2 or 3, the range has been really tight. We haven't had much distribution. So it'll be interesting to see what price wants to do when it opens up. So I'm just going to move down to the 5-minute. Just going to move this out of the way. We know we're in this SIBI, so I just want to move this out of the way. So last night we had Asia open here. It trended. It did not range, so it trended. And then here we have London 1, 2, and 3. So these are just 90-minute cycles for me. I'm going to take off just the 30-minute cycles here so these are just 90-minute cycles that I use. And I learned about time cycles from Zusi. Took a 3-month mentorship with him and I learned about time cycles. But anyway, I just want to let you know that that's what those boxes represent. So we had London move down. And then the AM cycle, which starts at 7 a.m., we took out the low of London. So you can see here, we took out the low of London right here. Let's just see if ES took out the low. So ES did not take out London low. Do you guys notice that? So we have an SMT. So here's London low down here. Here's London low, and ES did not take out London. And here we have on NQ, here's London low, and then NQ came down and we wicked out London and then moved higher. And then AM2, which is just the second 90-minute cycle, we've moved down a little bit. And that is where we are. So just know that we're in this SIBI, right? Let's just go back for a second here. We're in this SIBI. I just don't like to have so much stuff on my chart, but I just mentally know that we're inside this SIBI. Just to go back again, we're inside this SIBI, okay, guys? So here's our 3 indices. So we have YM, we have NQ, and we have ES. And here's our midnight open. Now, if price wants to go higher today, we might want to come down and seek out some liquidity. And again, I'm just going to move this out of the way so that it's not in our faces. And let's just take a look at on the 1 hour. On the 1 hour, we have this imbalance here. So that is the BISI that price made as price moved up yesterday. So we've got that. Got this one here. Right here. That's a small one. Price moved down, moved up again. So let's see if price wants to come down, maybe take out some of this liquidity. And the market's open. Also noticing here, so what I've done is I've opened up a second indicator here. So I've got my 4 hour here, which I just love. I use every day, but I opened up a second one just so that I have the daily. So here is Tuesday. Here's Monday morning. This is when price came down, and we took out Thursday and Friday. It's very handy to have these candles embedded on your chart, and then you don't have to be flipping from different time frames. So Tuesday, here's opening price from Tuesday, which is today. Price has already come up, and we have met this wick here. So this is a balanced price range up here. So price opened, we came down a tiny bit, and then we moved up. So again, it's just giving us a few clues as to what price is doing. Okay, so just watching here to see if we're going to go down, we'll take out Asia. Here's our Asia low. And then here are the afternoon session lows from yesterday. So if price wants to move higher today, let's see where it wants to grab its liquidity from. Hey, good morning, Just USA. I know I'm wrapped up because I'm cold. I was out with my dog this morning. It's freezing. It's snowing again. We're going to get a lot more snow again tonight. Okay, so we're coming up to taking out Asia low NQ anyway. And we can take a quick look at the indices and see what's happening. So we got YM. Open, low, high. So this candle is open, low, high. So YM is going up. And we've got ES and NQ moving down. Again, let's see if we move into this area of where this busy was made yesterday. And here's our PM sessions from yesterday. So see if we take out the PM session from yesterday, or if we get some sort of reversal at some point. So NQ took out Asia low and ES did not. So Levere, I see that, so ES has taken London low, it hasn't taken Asia yet. That's why we have an SMT here. And NQ has taken Asia and London low, obviously. But let's see if it goes for some more of this liquidity further down. Again, we had all this nice liquidity that was engineered yesterday. This price moved up all day. So ES has not taken Asia. Easy to look here. Let's just go to the 5-minute on the indices. We can just compare all of them here. Well, we may have slightly different charts, Xavier. Totally not doubting you whatsoever. So I can see here that we haven't quite tapped Asia. That's why we have this SMT form here. We got this SMT down, and then this one is a little bit up. But each chart, like maybe, I don't know, maybe you're on a slightly different one because there's different versions of charts. But okay, so let's just go back. I just want to see if price may want to like make a run for some of this liquidity down here. Let's see what happens. ES is making another push to take Asia. There we go. There we go. On my chart, Asia's just been taken by ES. Again, we've got Fed speakers today. So here on our 4-hour candle, so this one opened at 6, so we had open, high, and then we're moving lower. Here's our midnight. So good to see us moving away from midnight. Yeah, that's okay, Livia. Again, like I say, like some people trade slightly different indices, like the 100s, and there's slight nuances, right? So just to reiterate, like our macro starts at 9:45, but I'm going to be waiting for 10 a.m. I want to know for sure which way price is going to want to go. And I like to wait for that 10 o'clock, 10 a.m. candle to open, like unless we get hella clear manipulation. Yeah, and YM is going up, so that is an SMT there. I'm just going to move to the 1 minute. I want to see if the first presented fair value gap is opened, so tiny one. Guys, just a reminder that I'm an ICT student. I don't recommend that anyone trade because it's highly risky. I'm not an expert. I don't teach it. I'm just here for entertainment purposes only. You do you. This is not a call service. And if I should take a trade, you should do you, and definitely don't copy me. Dropping lower. Looks like we might be going for some of this liquidity down here. What's nice about this 4-hour embedded candle is it shows when liquidity is taken. So we can see on this 6 a.m. candle, price did not move up high enough to take the 2 a.m. or the 22 p.m. liquidity. We have not taken liquidity from up there. So right now price is just running. We've taken the lows from 1800 and 1400. So here we are, we're back just on the 1 hour, just to give us some perspective of where we are in the bigger scheme of things. So we're right here. If we were to take a fib and just pull a fib from the low of yesterday to the high of today, just look for the OTE, so optimal trade entry, that's ICT concept, between the 62 to 79%. ICT concept says that price could retrace as far as 62 to 79% before doing a reversal. So that would take us like down to just below the month open, just below the yearly open. I'm not sure price will go down that far, but we'll see. And of course we have this BISI, excuse me, right here. So let's see if price wants to jump into here. If it wants to stay above the 50% of this, that would take us to 50%. Up here, we're in a premium area, and we certainly don't want to be going long in a premium area. So we want to see price come down here. When price makes a big run down like this, and it's a little bit tricky because changing the state of delivery, if like, let's just say hypothetically that there's a potential smart money reversal, changing the state of delivery is like way up here. So when you have these long run downs, it means the change in the state of delivery is way up here. So if, and I'm not saying it is, if this is a smart money reversal, then with the change of the state of delivery up here, we just have to, you just need some patience, right? Because if price were to come up here, maybe then come back and find some support in a fair value gap before going higher. But little extra patience is required on days like this where initially the rundown gives you a change in the state of delivery that would be pretty far away from current price action. So I'm just, this is the type of situation that I'm cautious in. See if we get a rejection from ES on the first presented fair value gap. Morning, Polder Snack. I always laugh when I see your name. We're not going to see any higher time frame SMT on the bottom. Yeah. Yeah, I'd at least like to see um, price come into one of the fair value gaps, like that was created yesterday, like something of substance. Yes, indeed, we've taken out Asia, but is that enough for New York AM open, right? If that were London or something, and we took out Asia low, that's a little bit different because there's less volatility. But in New York AM, I want to see a key level. I want to see price come into a key level, take some liquidity, take its time in a smart money reversal, and then show us some a framework. That's what I want to see. So anyway, we're in the first macro. That's fine. Let's just see what happens with the 10 a.m. candle that opens. And let's just see if price finds its footing somewhere. For those that may not be familiar, this is basically what I am looking for. Smart Money Reversal. So I want to see price come down, create price come back up into an imbalance area, take out this low, begin to move higher, come back into a fair value gap, and have a change in the state of delivery. That's basically what I'm looking for. I guess you could kind of look back here at 258. This would have been manipulation above Asia here, and then price has just been slowly coming down. So on the 1 hour, moving into this hourly BISI here, and just below the consequent encroachment of that BISI is the 50% of this range. So 50% would be the start of the discount area versus premium area. Notice how it respected this very small BISI from yesterday, from here. Very small busy. Price respected it. That's so cool to see. Coming to the 50% at this busy, just above the 50% of that range. Just looking for any other hourly bissies from yesterday. What do you have, Livier? What have you got for us? Let's look at the weekly chart. Okay, so last week I have a bit of a hammerhead or whatever you call it. We have the low. This is on the hourly, so don't pay any attention to that. Let's just see. All right, what do you got for us, Livier? Price was at 50% of. 50% of. Oh, I see 50%. No, I'm not sure. I'm not sure I understand what you're saying. I'm looking at potentially like 50% of this wick is kind of interesting. This certainly down here, this low, this is sell side. This has been on our charts for a while. Of last week. Okay, so this is last week, and price is dipping just below. Like if we take our fib and just take like 50% of last week. This here is 50% of last week. Liquidity. Well, this week we swept the low of last week for sure. That's what happened yesterday. That was unexpected for me anyway. You think the price should go lower? It could. It could. We could have hit that SIBI this morning, right? We talked about it before the market opened and looked at that as a potential mitigation block. Let's just go back there for a second. Right? Potentially mitigation block here. Price came up, hit 50%, and then started to drop. But I mean, that's definitely a possibility. I'm just thinking that price came down this far yesterday. We swept all of this. Like we have taken all of this. So I'm I'm thinking, that taking at least the 62 to 79% and then taking another run up for these highs. Because if we were just here yesterday, smart money wanted to buy low, they're going to want to sell high. Like there's a reason they brought price down here. Plus it's new month and we need to see manipulation. Yeah. Yeah, for sure. For sure. I think, like I say, smart money brought price down here for a reason. Usually when they bring price down, they want to induce people to sell, get out of their positions, and then they're going to take price higher for the week. And we're looking at the whole week, right? We're not just looking at what's happening today. It's an on-farm payroll week, technically. They're going to set up the month. So it's our job as scientists to figure out or to be observant, not even to figure out, just to be observant as to what is happening on the chart on the higher time frames. So right now, the 50% of this range is right here. 50% of the range. As I said, 62% is just below the month open and 79% is just above this BISI. So let's just go back. If price wants to go higher, it could come back and feed into, like I say, feed into these BISIs. I'm just going to move the daily over a little bit. These are the BISIs, right? The price moved up so quickly yesterday. These are the BISIs where there is liquidity, there is imbalance, price delivered but moved so quickly that price must come back to redeliver price. That's a fair and balanced market. That's what a market does. It needs to deliver price fairly and equitably. And when it moves up really quickly, it must come back to redeliver price. So we've redelivered through this BISI here. So this BISI is not holding as support. It could begin to act as resistance. We might see a new low. We might. Also notice here that we had equal highs. Pretty much. We got a few wicks here, but equal high here, right? Inside this SIBI. Let's look at the 10 a.m. candle. So here's the 10 a.m. candle. Here's the open price is this black line, right? This is the cycle open. So open, high, low. Could see an expansion lower. But we're inside this busy. So again, I'm just observing. I'm not in any way predicting. I'm just observing. Let's see. Yeah, it's okay to take a trade that doesn't work in your favor, so long as, we're strict on risk management, right? Risk management is everything. We're in the business of managing risk. Protect your capital, manage risk. Have your rules in place. What are you willing to risk on that trade? Always look at your downside before you look at the upside, because that's the reality. And then journal. So we've come down into this busy. So this 10 a.m. candle, we opened here, we dropped down just above this month high. So we go back to our hourly here, just above the month high. So here's our 61.8%, this line here. This is ICT's optimal trade entry, OTE, right? So he says the price can come down between 62 to 79%, and you can anticipate potentially a potential reversal. So we're in the golden horseshoe here. If price is looking for somewhere to reverse from, but price could continue to come down. Levere, we could make new lows, but I'm just thinking that price came all the way down here last night or Sunday night and stopped here for a reason into this busy here. We've already been down here, so I'm more inclined to think that we're gonna redeliver price before retesting perhaps these areas up here. But again, market's going to do what the market wants to do. We're inside the daily BISI as well. So let's see if this daily BISI is going to hold price. Is it going to support price, or are we going to see price drop through it? Still dropping. It's key in this first week of the month to just chill and try and understand how the market wants to set up for the month. Because once you get the higher time frame understanding of what the market is trying to do on the higher time frame, it makes trading a whole lot easier. Are we on the buy side of a market maker model, or are we on the sell side? Like, until we figure out what's happening on the higher time frame, we just stay on the higher time frame until we see what smart money is setting up for. And when you see that setup and when you understand what smart money is trying to do, then you align yourself with smart money. We're not here to fight smart money. We're not here to beat the market. We're not here to beat the odds. No, we're here to figure out what smart money wants to do. And then we align ourselves with smart money and just ride that wave. Well, Lavere, there's a 50% chance that you could be right. You are you have a 50% chance of being right that the market's going to go down. I like it. I want to see I want to see if this BISI is going to hold, if this hourly BISI is going to hold. Again, I keep coming back to the higher time frame. We have this nice 4-hour candle that's opened. We've made this low, which is, as ICT says, the wicks do the damage, the bodies tell the story. So let's see if this BISI wants to hold price or not. That's what we're gonna observe right now. Well, if we go back to the indices here on the hourly, whoops, let's go to the hourly. So we got YM here going up. So we have a break in correlation. We have a weekly and daily and 90-minute. We are NQ is approaching the monthly open, but ES is still quite a ways from the monthly open. And then we've got YM YM's going to a different party tonight. ES is inside this BISI. Right? Above the 50% consequent encroachment. And so far on the hourly, this BISI is holding price. It is supporting price. So far. And YM's off to a rave. Now the first macro has finished. And so let's wait patiently. Wait for some more clues. I like the fact that we're well below midnight. Okay, so my rule is we buy below midnight, we sell above midnight. I like that price is well below midnight because this makes a buy. Because a daily candle, remember, if a daily candle is open, low, high, close. And so what's happening down here? So inside this BISI, we have chatter, 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 which we always see before smart money reversal. So we have a low, price comes back up, a lower low, price comes back up, a lower low. We came right to month open. We kissed the month open on NQ and we rejected from there. That's a significant level. Month open is a significant level. Let's see if it retests. Month open. Yeah, we kissed the month open. We kissed the mouth open. Okay, showing weakness here. We're dropping below the monthly open. Oh, I'm glad you're refining your model. It must be random. Oh, the 19RR trade. Can't remember. I think that was a few weeks ago, wasn't it? Oh no, that was the 733 points. Oh, I know that was a good trade, eh? Yeah, I was pretty happy with that. Okay, Levere. Just remember, Levere, there's no rush, eh? Like it's 10:25. The next macro is at 10:45. Wait for whatever you believe. Wait for good evidence. If price is going to continue to drop, we could come right back down into this BISI. We've got sell side below. Remember, guys, whatever happens, don't worry about missing a trade. Like you're not going to catch every trade, and you want to respect your model. You want to trade your model. You want to trade when you have clear indications, clear signs. You're not going to catch everything. Like you definitely should not. Otherwise, you're going to be like a billionaire and you're not going to be on this channel. But there's a trade like literally around the corner. So I don't worry about FOMO. Like if you miss a trade, so what? The next one's coming. Too much information on your chart, Levere? Yeah, boy, become paralyzed, eh? Too much information on the chart sometimes is just paralyzes you. You want to have like a simple model. When you see it, you know it, and you have to have your risk management um, nailed down. And once your risk management is nailed down, you'll never be afraid of taking a trade and being wrong because it's going to be a very, very, very minute amount um, of whatever it is you're trading, whether that be sim or live account or getting funded, whatever it is. You keep those losses super, super, super tight, and then you'll never be afraid of taking a trade. Let's wait in the name of high RR trades. That's my shtick. That's what I like to see. I still want to see these highs. I want to see these highs taken out. I don't know that we'll get there this week, um, especially being non-farm payroll and now things being taken off the calendar. That could be next week during CPI. I don't know, but that's all I'm saying. There's a reason Smart Money brought price way down here yesterday. But this could be a mitigation block up here, and then price could come right down, to sell side. I don't know. I tell you, this is what I like to see. I like to see this chop, 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 chop here because that always precedes a smart money reversal. I want to see this. I want to see this busy act as support if there's going to be a reversal, and if not, we could. The veer could be right. We could go right down to sell side. Previous day. We could take out previous day low. Um, must be random. The longer trades, like those are the trades that I like because I only want to find 2 to 3 good trades a week. And what I mean by good trades is I like to see the good setups on the higher time frame, meaning on the hourly. That's why I have all my levels are on the hourly because when you get those trades, they run. Right? If you're more of a scalper and you're trading like on the hourly 15 and then, the 1 minute, those are going to be, you can anticipate shorter runs, right? But you just have to decide what kind of trader you are. You have to have a trading system that works for your personality, whatever that may be. And then you have to stick with it and be the absolute best that you can be on that model. So I have one model, which is A and B, so Smart Money Reversal or continuation. So it's like the 1A, 1B. And that's what I happen to see on charts. And I'm not great at scalping. I'm totally honest about that. I'm not a great scalper. And I've just realized that because I tend to stay in the trade too long. Even when I get in a scalp, I keep thinking that it's going to go and then it doesn't. And then I either get like a loss or a break even. It's stupid. So you have to find like what works for you and what kind of personality you have, and then stick with one model once you back test it, forward test it, and once it's something that you see very easily on a chart. Like a good model is something that you personally can see easily, whether that be breaker blocks, inverted fair value gaps. ES is making a nice little push up here. So I like to see this chatter. I like to see this boom, 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 boom. But I like to see this because this happens at the bottom or the top of when there's going to be a reversal. So I like to see what we're seeing here. But we need to see proof. We're scientists. We need to see proof. Show us what's in the petri dish. Two trades per day? Well, that's up to you. I mean, it depends what your trading system is. My main trading session is New York Open. Okay, that's my main trading session. I do not like to trade the afternoons. And I happen to really like London. I wake up for London and I like to watch London to see, like, to me, London is the trailer for a good movie. Dropping again, ES here, well, that was just a pullback. So I like to see how London responds. And London to me is very clear. Like if Asia ranges and then London takes out the high or low of Asia, I'm going to take that trade every single time. And so I really do enjoy. And then if there's a nice manipulation by London, then there's a good probability or a probability that there will be a continuation in New York Open. So for me, like the London New York sessions, they blend for me. I use one to see what the other one is doing. Maybe. We're way below midnight, Levere, and I find that attractive. Price did not go much above midnight for a good sell. We didn't go much above it, but it's getting juicier and juicier the more we drop below midnight. But we could go right down to sell side. Again, I keep going back to the hourly. We could end up right back in here. Previous week low is coming up. We could take out previous day low from yesterday. And we go right down to sell side here. Which is kind of weird for a no news day. Like, really, it's a no news day. There's no news today. There are members speaking, and when these members speak, we tend to get a market that can wick. And then Wednesday, we have non-farm employment change at 8:15. So we're going to see overnight probably not much price action in anticipation of this number. And then Thursday, we have more speakers, FOMC. So we got more speakers. And then Friday is a no trade day for me. No bueno. I don't trade on Fridays of non-farm payroll. So, that's what we've got. I know you guys seem surprised that I'm only interested in like 2 to 3. Yeah, they canceled the news today, Levere. Yeah, exactly. Exactly. You guys seem a little surprised that I only want to take 2 to 3 trades like a week. So we're just above year open here, guys. But in the last 2 trades, I've taken 1,000 points. So you don't need to take a ton of trades, and you have to have a system that you're controlling what your potential risk is, right? Every time you enter a trade, you have potential risk, and you have to be able to control that risk and make sure you're getting the RR that supports taking that risk. So we're right in that OTE area, optimal trade entry area. Thank you for thinking I'm patient, because as a personality, I'm not a patient person, but I've had to become patient. Like that has been my biggest journey in terms of being a trader. Uh, that has been like the devil on my shoulder. I got to be honest. And the thing is, I went through a period of 9 or 10 months that I was break even. And it was like, honestly, the worst 9 or 10 months for me. And everybody kept saying, oh, being break even is a really good sign. It means you're you're almost there. Well, it didn't feel that way to me. It felt like, yeah, I get a good trade, I get a bad trade. I get a good trade, I get a bad trade. I get a good trade, get a bad trade. Like I was just in this like revolving door. And then what I did was I broke apart every piece of my trading strategy, not strategy, but my um everything about a trade, right? It's starting with analyzing, starting with what session am I trading, right? I used to look at all the sessions and then I just paired that right back to New York AM is my session with a little bit of a honeymoon with London. I'm watching price here because we're right above year open, which is a key level here. Okay. Um, I looked at my risk management. Like, am I controlling my risk so that my RR wins are going to be larger than my RR losses? So I pulled apart the whole system and I rebuilt it just like you rebuild an engine from the ground up. And two of the key things for me were as soon as I reduced or eliminated all the stupid trades, I honestly almost instantly became profitable. All those trades where you think, let me try this. I call it the let me try this trade. Let me try this. As soon as I eliminated the let me try this trades, I became profitable. And then I became very, very, very tight on my risk management. So even if I have a smart money reversal set up, but my change in the state of delivery is really, really like high up here, then I have to be patient and I have to wait. So that's the journey that I have been through, but reducing the number of trades I take and just listening to other traders who are profitable say the same thing. As soon as they eliminated let me try this trades, the table turned. And I would rather take 2 good trades a week and take home all that money than to be taking 2 or 3 trades a day, especially when a market is choppy, volatile, and it just keeps taking those small losses, taking those small losses, taking those small losses. Because when you have 10 small losses or 5 small losses per week, that's your profit. It's gone. So I became that impatient person that through, you know, tears, hard work, having to really face my own weaknesses, I guess, right? And by nature, it can be hard to say, look, you suck at this, Louisa. Like, honestly, you really suck at this one thing. But if you can change this, you're going to see some results. And then the more results that I see in a positive way, the easier it becomes for me to be patient. Because 2 to 3 solid trades a week, I mean, good trades a week, you're taking home that money at the end of the week versus 2 to 3 trades over 5 days, trying the afternoon session, the morning session, let me try the London session. And before you know it, you've got 7 to 10 small losses of $50 each. It's $500 gone for the week. And that adds up and it hurts your psychology, right? Like it really, like, forget the money, okay? Because I'm talking to people who are in sim here as well. Forget the money. It's your psychology that starts to take a beating. And your psychology is the most important thing to you as a trader. You know, you've got to get up in the morning and feel positive about what you're doing. Because when you get into a spin cycle of, you know, I really suck at this, I'm taking all these losses, I'm really frustrated, let me try and make this money back, you get into this vortex of psychological warfare. That's what I call it, psychological warfare. And it's really, really hard. Trading is hard. And it's not like we have a bunch of friends and family members who are supportive, right? Like, I never tell anyone that I trade. When someone asks me what I do, I tell them I'm in finance and I tell them I'm in risk management. Usually the normal people never ask what that actually means, and I don't explain it. because everyone's got some sad, sucky story about an uncle or a sister or whatever that, failed at trading, and then they want to tell you that story, and then, like, I don't want to hear it. I'm not interested. They're not me, I'm not them. So it's just, anyway, it's really nice to have a good community of people that understand you, because we all go through the same thing. I am no different than you guys. We are all the same. We all have these things that we're having to face ourselves in the mirror and say, I need to change this. And I'm struggling with changing this. I'm failing at changing this. What's going to make me trade less? What's going to make me stick with one strategy? What's going to make me stay out of the market on days where I know I should not be trading? What's going to make me stay out of the market, shut my computer after a trade, and not open it until the next day? We all struggle with these things. And like I say, I've shared with you the few things that made the biggest difference to me. Having a strategy that I can see easily, that I trust and is very mechanical. Choosing one session out of the 3 sessions that is my session. Is New York open for me? And then stopping all the let me try this trades. I think I wrote this down once before. Hang on a second. Um, let me try this trade. There was an acronym. I'll think of what the acronym is, but I still like what we're setting up for here, guys. We've got an SMT. We've got an SMT on the 10-minute, okay? Just look at the purple line here on ES. We've got a downward line, and on NQ, we've got an upward line. Let's just put on here what the change in state of delivery would be. Is right here. Change in the state of delivery. Where would our inverted fair value gaps be? Boom, right here, inverted fair value gap. Price came back in here, dropped down. Now we didn't take out that low. And we're coming into a macro. Okay. And we are above year open. I want to see some strength, and we've got a breaker block. So we have a low, high. We don't have a breaker yet. Oh, got a mitigation block. Sorry, guys, I'm just talking out loud here. Fair value gap here. Price came back in. Change in the state of delivery. Coming into a macro. I'm gonna take this, but don't copy my trade, guys. You guys have to do you. We have we've taken out my AM low, showing some support in this busy. We are in a macro. I want to get above the opening price here of this 10 a.m. candle. I don't want to see it come below the change in the state of delivery. Closed above, change in the state of delivery. Like we're in a macro. I want to see it. I want to see it go with some enthusiasm. I want to see some enthusiasm. Here's the opening price of the 10 a.m. candle. Let's go. Right? I want to see it. There's our open, our cycle open. I want to see price get above this cycle open and go higher. See how it's just like we're in a macro. We should see some enthusiasm. We want to see some, I think about track runners, right? They get off those blocks. We want to see some explosiveness. That's what I want to see. We're just, this is like, ugh. Come on now. Come on now. I might just take one off because I want to see, like, I want to see some movement here. I want to see this thing get off the starting blocks. You know, if price is not moving in a macro, when's it gonna move? You know, we got no news. We got all these speakers speaking. You know, we have to ask ourselves, what's the environment today of the. Seems pretty weak here, doesn't it? Come on, let's go. I don't want it to go below my change in the state of delivery. No, I didn't catch the short. Did you? Oh, that's good. Levere cut the short for us. We're coming to the end of the macro here, and this thing hasn't moved much. So if it breaks the change in the state of delivery, I'm out. But until then, I'm hanging in there. It may just chop around here for a while. I'm out. So this setup, I would take this setup again and again. This to me is an A+ setup. So we have low, high, lower, low. And we've got our inverted fair value gap. We have our fair value gap. We have an SMT, and we are inside a macro. So I would take this trade every time I see this trade, I'm going to take it. Now, I'm not going to put my stop loss below here because that is too large a stop loss for me. We made it through the macro with really like almost no movement, which indicates that price may want to chop around for a while. Like, so for those who hang out and who trade the afternoon session, there might be something this afternoon, but that's it for me. That was my one trade of this morning. My whole goal is to manage my risk, so I'm well within my risk, and that's it. But I would take this trade. This is my setup. This is my model. This had all the confluences that I want to see. For me, trading has to be very mechanical. I don't want to make trading about emotions or where I feel prices going or my bias that I may not even recognize where I believed price is going. I see setup, I take setup, and over 100 trades, probability will work out in my favor because I believe in my model. So that's how I trade. That's how I trade my model. I see it, I don't think about it, I enter it. And as long as I manage my risk, everything else will work out. So if I took a 1 RR or 2 RR, this thing may still go, but I wouldn't get back into this now. That's one of my rules. But that's how I trade. I see my mechanical setup and I'm going to take it every single time. So 256201. I mean, technically the stop needs to be down here, but that doesn't work for my risk management. So my choice is I could reduce to 1 micro, right, and put my stop down here, or I decided to enter with 2 micros, but that prohibits me from putting my stop down here. So it's just a trading decision, right, that you need to make. But maybe on a day like today, one micro and then putting my stop down here might work. But anyway, it's non-farm payroll week. I make sure that I don't, this is not the week to be pushing or to be, pushing your boundaries. This is not the week to do it in, and especially without any red folder news today, and especially with a bunch of Fed speakers talking about who knows what, right? So anyway, that's the model, that's the setup, and that's it. It's, look, guys, it's mechanical. It's not emotional for me, and just make sure that whatever stupid things that you do in trading, that you write them down and you make a commitment to yourself, because you all deserve it. You make a commitment to yourself that you're going to make some changes this year. Because for things to change, you need to change. And if you're going to become a profitable trader, you need to be that profitable trader. And you need to stop doing stupid shit. It's basically, sorry, I don't mean to swear, but you know what? Nobody's going to do it for you. You got to do it for yourself. So put pen to paper, figure out what your trading system is, figure out how many trades per week you're looking at, and then become that patient person. Wait for your mechanical strategy. And when it shows up, take the trade. And if it doesn't work, it's probabilities, right? It's all probabilities. So, yeah, NFP is delayed. Yeah, exactly, William. Uh, Friday, I think tomorrow is still, they put back on the non-farm payroll, I think is back on tomorrow. So that's a day to be very careful with trading. So for the rest of the week, for me, it's this is the kind of price action that you get, this kind of like chatter during a macro. We expect price to move in a macro, and if it doesn't, that's giving us like a hella big sign saying back off. Take your foot off the gas. Take your foot off the accelerator. So there'll be lots of opportunities next week, and if you're going to trade this week, you make sure that you're managing your risk. Don't put risk on weeks like this, because it's just not worth it. So okay, guys, have an awesome, awesome, awesome day. We're getting a ton more snow tonight, and I will see you guys. I won't be back tomorrow because non-farm payroll is just not a good day to trade. So I might be back on Thursday, but Wednesday and Friday is a no bueno for me, and then I'll be back next week. So, okay, guys, awesome. Please like, share, subscribe, help a girl out, and you guys have an awesome rest of the day, okay? I will talk to you guys later. Bye for now.